In the lending world, the idea of a 50-year mortgage, I'm not a lender, I'm a real estate agent. I can do the math. I want to help you understand what this actually means for your wallet, your equity, and your long-term financial health. People hear 50 years and immediately think a lower payment, problem solved. Like anything in real estate, if you don't pause and apply a tiny amount of critical thinking, you can get taken advantage of. Let's take 5 minutes, look at the real numbers. I can help you avoid doing something that looks good on paper. Maybe it'll cost you more of a fortune over a lifetime. Now, I'll give you a loan scenario, looking at just a basic purchase price, a real Santa Clarita example. And if you're outside the Santa Clarita Valley, it's still going to apply. Let's look at a purchase price of $850,000. We'll put 20% down. That's $170,000 there. So the loan amount's going to be $680,000. Now, of course, you can adjust the numbers. We'll take an interest rate of 6.5%, and we're going to look at 30 years versus 50 years of payments. Now, as you know, the beginning of a 30-year fixed or even a 50-year fixed mortgage, a majority of those payments are interest. Now we're increasing that time frame to 50 years. So we're going to give you the monthly payment breakdown. On a 30-year mortgage, the payment is $4,298 a month. That's $4,298 a month. On a 50-year mortgage, $3,833 a month. That's $3,833 a month. That's $465 cheaper on a 50-year mortgage, an additional 20 years of payments, and that can be a lot for families and does make a difference. But here's the punchline. Total interest cost. Now watch this. Over 30 years, you're going to pay $867,000 in interest. Over 50 years, $1.62 million in interest. That's $1,620,000 in interest versus $867,000. Now that's $752,000 more for the privilege of paying less per month, about $500 or so. So the trap is going to be this. A 50-year mortgage feels affordable because the monthly payment drops. But affordability and financial, they're not the same thing. The 50-year loan keeps you stuck paying mostly interest for decades. You're building equity with a spoon, not a shovel. Now, here's the AI angle. You know, I always love talking about AI because really it's going to change the world, and it has already. Here's the fun. With the pace of AI, the way that it's evolving, there's talk of extended lifespans, optimized health, prevention tools, even medical artificial intelligence that monitors your body better than a doctor. You plug it in, your toilet monitors everything coming out. You got blood that's taken easily, and so on and so forth. So if we're longer, sure, the concept of a 50-year mortgage might sound less crazy than it does today.